Hello there, this is James and you're watching Tixee Live. In today's little episode, I want to discuss briefly the recap of the watch along, which I did about just over 40 minutes ago, or 45 minutes ago, and have a quick recap of that. Plus, I want to talk about what the whole market is waiting for, a certain testimony happening in about 4 minutes. So we'll have a little chat about that as well. But before we get into that, don't forget these little episodes or these little videos either are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So first of all, let's have a quick chat about the Canadian Consumer Price Index, which came out a little while ago, just about 50 minutes ago. Obviously, we had the UK CPI this morning, and it came out at 9.1%, and which hit a new 40-year high. Not to be outdone, Canada's CPI jumps to a 39-year high. 39-year high, so just slightly behind the UK. Not that it's a competition, of course. So Canadian CPI year on year was announced at 7.7% versus 7.4% expected. Canadian core CPI was announced at 6.1% versus 5.9% expected. So both a lot higher. So in fact, even the months on months came in higher. CPI month on month, 1.4%. Core month on month came out at 0.8%. So high, high inflation across the board. So a lot higher than anticipated. Not to the level of 9.1 of the UK or 8.6 of the US, but still, it was worrying that level got to 7.7 is a fair bit higher than 7.4% anticipated. This all comes down to the fact, of course, all about interest rates. And Canada's interest rate currently lands at 1.50%. Okay, a little bit below the US at 1.75. And those of you who were lucky enough, put it one way, or kind enough to join me for my watch along, I talked about a certain issue which I think might become more apparent in the coming months, which reflects into Canada. And I asked the question in my watch along, what really can the Bank of Canada do? Okay, they can increase interest rates again. Don't forget, that's the usual tactic. To fight inflation, you raise interest rates. But as I said on my watch along, I can see there is a problem, a big problem Canada may face on the horizon, and that is a housing crisis, a housing market crisis. Are they on the brink of having a housing market crisis? Because as I said in my watch along, if you do home ownerships, compared the home ownership to say the UK is currently at 65%, compared to the US, it's currently at 65.5%. Canada's home ownership is at 70.6%. So quite a few homeowners, more, it's got a large housing market. And obviously, when you raise interest rates, it increases the price of mortgages. So already the number of Canadian households are already struggling with the interest rate at 1.5, which they currently stands with in Canada. So with inflation increasing, obviously the usual tactic is let's increase interest rates to fight it. But can Bank of Canada do that? because literally, are they on a brink of a housing crisis? So I think that's going to be a story worth looking at and keeping an eye at in the coming months. I really do. Let's have a quick look at what happened with the loonie in particular, where the loonie's trading at the moment. To be fair, okay, not a gigantic mover on it. You saw a bit of Canadian dollar strength against the US dollar. This is on a 1 hour chart. We look at a 30-minute chart and going a bit closer. We can see there was a little bit of Canadian dollar strength against the US. However, the US dollar is still trading around 1.2963. It's clearly finding some buying currently at 1.29510. So yeah, it's like I say, it's not a massive bullish move, or hasn't been bullish data massively for the Canadian dollar against the greenback. But of course, we got to wait for the US session, which is about to open anytime now, to see if that sort of changes the mood. In fact, if we look at on a 4 hour chart, you can see that since the sort of beginning of June, you have seen a fair bit of dollar strength against the loonie. It reached that peak, that recent peak of 1.3058, but you are seeing a little bit of dollar strength. And like I say, this CPI, even though it was a lot higher, 7.7% versus 7.4, hasn't quite changed the fortunes for the loonie as of yet. But we need to see how the US session treats it. And is it a case that the market's thinking Bank of Canada can't do anything because of the housing situation? Is it that? Or is it just pure dollar strength? So we just have to see what happens in the next half hour or so. Excuse me. So moving on. My throat gets so dry. I do apologize. Moving on. What's happening now? Well, right now, right at this very minute in time, all eyes and ears on Jerome Powell's testimony to Congress. It's happening. Literally should be starting any minute now. As usual for live events, I have got my trusty phone with me, so I will be keeping an eye if we get any particular statements on the market from this testimony. Obviously, the market is going to be watching this with bated breath, because they're going to want to see how hawkish he is in this testimony. How hawkish is he going to be? Is he going to drop any more hints of further rate hikes, which obviously the economy is scared of? Because they're saying they're scared if we're too aggressive with interest rate hikes, we could fall into a recession. Obviously, Powell, as you know, or people who've watched me before, they know I refer to him as the inflation terminator, because he's so aggressive. He comes across so hawkish against inflation. And many things he said about it, prepare for pain, things of that. So be interesting to see what this testimony comes out of this testimony today. Don't forget, he's also testifying again tomorrow. So it's a 2-day event. So the market is sort of waiting for that, really, see what comes out of that. Something new did come out today, again, in relation to this. The Wall Street Journal has reported that the Fed was seeing a slightly higher than 50% chance of recession over the next 4 quarters. So obviously, I know we have, over the last couple of days, last week or so, in fact, we have talked about that dreaded R word a lot. And that dreaded R word is still very much on the minds of the market. So we'll be watching intently what Powell may say, or if there's anything coming out of his testimony. I think probably the big bulk of it will come tomorrow, but we'll have to wait and obviously see what is said by that. But let's have a quick look, see if there's anything in particular showing that anything at the moment. No, nothing, not much at the moment. Okie doke. Anyway, how the market is doing at the moment. This morning, remember we said, we asked the question, has the market lost that happy feeling? Are we in a bit of a gloom situation? Because we were quite optimistic yesterday. And today it was. And we started the market off a little bit more, obviously, a bit more gloomy. We did see a fair bit of dollar strength. And of course, the question to ask is the dollar still king? Well, reasonably so. But since the European session has carried on, we have seen a little bit of fight back with certain currency pairs, which I'll bring up I'll bring up now. First of all, let's bring up the cable. We were talking about the cable, British pound, US dollar. Don't forget, we were talking about that earlier on because of the UK CPI. Oh, that's a good question. Actually, that's a very good question. Thank you. Big bear market rally coming. That's a really, really interesting question. Look, to answer your question, some analysts think we're already in a semi-bear market. I think we're in a little bit of a semi-bear market. But I think the real bear market won't really hit until the S&P approaches that 3,000 point level. Then I think we could be really facing a very big bear market. And it's all about the recession talk. It's all about recession talk. And there's talk about, I think the market basically assuming we are going to have a recession. The question is it going to be a soft recession, a medium recession, or a hard landing recession? So that is the question on the mind. So yeah, we are in a slight bear market at the moment, in my opinion. But I think we won't hit a real big bear market till the S&P comes close to those 3,000 points. But again, brilliant question. Thank you very much for asking it. Please, I love interaction. Thank you for the question. Brilliant. Sorry, excuse me. So anyway, going back to the cable. At the beginning of the session, don't forget it was testing this key level, this level we've been watching for a while, which is 121.976. Okay, it tested it. It's since bounced back off that. And we're trading again above 122.67. If you do it on a shorter time frame, we can see there has been a bit of a fight back by the sterling. So yes, like I say, dollar is still king in general. So you still have that risk off appetite, but you are seeing the sterling fighting back a little bit against the greenback. As well as that, we've got the euro. Again, remember the euro at the beginning of the session was trading below 105. It was trading around touch low 1.0481. It has since managed to get a little bit of strength back against the greenback, but we still have this key level which we put into place yesterday. Remember, we put it in place yesterday, which acted as an area of interest and did indeed prove to be a potential support, 10578. So that's interesting. Let's have a quick look at some of the other things we spoke about as well. We spoke about oil, didn't we? Because again, we're saying, maybe this is a good sign for the oil market to start to drop for those of us who drive. Obviously, oil has remained under a lot of pressure because there is real fear now that recession will with recession comes low demand. So oil is WTI, that is trading at the moment $102.25 a barrel. Brent is currently trading at $106 a barrel. So if you look at on a 4-hour chart, this is quite a fall from grace for both the two energies. Let's have a quick look at the S&P 500, see how the mood is. Again, like I say, we had a bit of optimism yesterday. We have been seeing a bit of a sell-off since then, so optimism waning, and it came down to around about 3,666 points. We've seen a little bit of a fight back as it now is currently trading at 3,733. Let's look at another high-risk asset, which is, of course, Bitcoin. We talked about Bitcoin for a good couple of days as well recently. So let's have a quick look at that, how we're doing. Right, still not having that massive bullish momentum that Bitcoin bulls would hope. We're still trading around that level we've been watching for several days, $20,355. So still around that zone. So yes, that's how the market's feeling at the moment. We're going to need to see how the US session carries on at the moment. The other thing I want to talk about, yes, I want to talk about this. Those of you who are unlucky to know me, know that I'm a big, just spilled water on myself. I'm a big gold bug. In fact, gold was the very first asset I ever traded. Okay, so I've got a big love affair for it. In fact, when it was trading at, when I first started, it traded at $636 an ounce. That's how long ago it is. But I saw gold had a really interesting movement today. At the beginning of the session, the European session, when I was talking, it was hovering around that key support we've been watching, which is $1,828. It's since rebounded off that level, and it currently is trading at $1,841.46. It's being capped by the 100-day moving average and 200-day moving average. So it's interesting to see if it's getting its shine back. I think the main move for this is that US 10-year Treasury bonds have gone down. Their yields have dropped slightly at 3%. So obviously, I think there might be a bit of the market pushing its money into gold as a potential safe haven. But again, the bulls have been here before. I mean, we've been watching gold for a while now. It's been trading between $1,828 and this key area of interest of $1,864. So we're going to need to see if the bulls really start getting momentum, which they failed to do so over the last couple of trading sessions. Other major events for today, not for today, for the rest of the week. Obviously, Powell testifying. That's going to be huge. German manufacturing PMI, UK services PMI, and US initial claims. So they're all big events to keep an eye on for. How the market's feeling as well in general. The FTSE currently negative 1.35%, DAX negative 1.89%, and Eurostoxx currently negative 1.46%. But let's see what the US session brings. We start to see that maybe a little bit of a buy in the S&P 500. Maybe the European indices will start changing around a bit too. So let's see how the US feels. Remember, you can ask me questions anytime at all, like this gentleman did, which I really appreciate. So thank you for that question. Never hesitate to ask me a question or talk to me, or even just sort of say hi. This is what I'm here for, and I like the interaction. If I don't know the answer, I will go and find it for you and tell you next time. So please never hold back. Never hold back to talk to me or ask me anything. Here we go. Okay, here we go. So another great question. Thank you. If the US session brings negative news, do you think the market reaches a new low this week? Now, bear in mind, that's a great question. Bear in mind, the US last week was absolute turmoil. It was a disaster of a week. In fact, the global stock market closed at levels they haven't been trading at since March 2020. And that was on the back, of obviously the US Fed and several other central banks raising interest rates. That's when the fear really set in. Now, beginning of the week, especially with the US extended holiday or weekend even, the market managed to recover a little bit. It's losing a little bit of hope again today. I really think, in my opinion, the testimony today, we won't hear an awful lot from Powell. We might do. I don't think so. I think the bulk of it tomorrow will be what Powell says. And I do think we will see more pressure. Whether we hit a new low this week compared to last week, I think we could border around the same sort of lows we had last week. So I don't think it might be as dramatic as that. But yeah, I do think that we could see further pressure and further sort of risk off appetite. And I really think it's going to be down tomorrow from what the more bulk of the testimony is going to come from tomorrow's bit. I also think, and I know one thing which I will be keeping an eye on again, it happens tomorrow. US initial claims, I think will be interesting, because one of the things that's always given the Fed some confidence that the US market can handle increase in interest rates is that they always say they've got a buoyant labor market. And obviously last week we saw an increase in initial claims. It went up to 229,000 opposed to, I think it was 220,000 expected. So we are seeing a bit of signs of that the job market still quite buoyant, but feeling the pressure. So that could. But I say, yeah, I think tomorrow's testimony will potentially bring more bad news than tonight. But again, it all depends, but yeah, those lows could be, we're definitely in a bear market of sorts. So yeah, but a great question, Bob. Great. I guess that's your name, Bob. Brilliant question. Thank you. Any more questions at all? If there's no more questions, and they were brilliant questions, absolutely fantastic questions. Thank you so much for those questions. It's absolutely excellent. And like I said, I do love it when we get the chance to interact. Okay, if there's no more questions, don't forget, I'm back online again tomorrow at 8 a.m. UTC to discuss the European session. We also will discuss what anything from the testimony as well. And then again, of course, tomorrow I'm back on again at 11 a.m. UTC to discuss the US market and what's happened in the European trading session. So please come and join me for those events. And remember, like I always say, if you're watching me on Facebook and you like it, give us a follow. If you like watching me on YouTube and you like it, by all means, subscribe if you like. Hit the notification button to let you so you know next time I'm going live. If you found this program interesting and useful and helpful, give me one of those. It's nice to know that you're liking it. But anyway, till next time, like I always say, till next time. Well, 8 a.m. UTC tomorrow. Till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.